Yeah, what's up guys, what's going on? Hope you're good. So guys, in this video I'm going to be sharing with you the most simplest strategy and most accurate strategy at the same time. It's simple and also profitable. See how you can trade this strategy. Now it is a pattern strategy. I've taught this pattern severally, but I've not taught you guys how to use this pattern this way. All right, so first of all we are going to be looking at the M and W pattern, okay, or double top double bottom pattern. You are looking for M pattern, okay, to sell, or double top to sell, and we are looking for W pattern or double bottom to buy, right? This is just the simple pattern we are going to be looking out for. This pattern I've noticed is so powerful. For me, it's the most powerful pattern whenever you are trading, not just synthetic indices but even currency pairs. Okay, now what I want you guys to do also, in order to take quality trade with this pattern, is that I want you to also consider the trend before looking out for this pattern. Now, before you start looking out for M pattern or W pattern, for instance, let's go with M pattern. If you are looking out for M pattern, first of all, go to a higher time frame like 4 hours time frame to see the trend. Okay, so if you are watching out for M pattern, you want to make sure that you are seeing a downtrend, guys. Okay, the trend must be down. So once you see a downtrend, then narrow down to a lower time frame like 5 minutes time frame, 15 minutes time frame, or 30 minutes time frame, and start looking for M pattern within the trend, right? If you want to see W pattern, you should go up to a higher time frame like daily, 4 hours. I prefer using 4 hours time frame to check my trend. Then once you go to 4 hours time frame, you look for the trend. So if the trend is down, for instance, that means you are going to be looking for W pattern. Sorry, you are going to be looking for M pattern. If the trend is up, okay, you are going to be looking for W pattern on a lower time frame. As simple as that. Okay, so let's just see one clear example. Then, okay, I'm going to be sharing with you a bonus. Okay, how to know, because not all the M pattern, okay, not all of them works. Sometimes you will see M pattern, the price will still disobey the pattern, and maybe if you see M pattern, the price can still disobey it and keep going to the upside after making or creating a double top. Or even the W pattern, the price can still keep going down even after creating it. But I'm going to be sharing with you how to know the ones that will work and the one that will likely not work, okay, and avoid them. So first, if we go up to check the trend on 4 hours time frame, if you look at this particular trend, you can see that this price is currently creating after this pattern, which is the W pattern we are talking about. But this is on a higher time frame. The price started creating a kind of a higher high, higher low, okay, higher high, and we are looking at the next higher low, okay, based on the price action now. So from here you can see that this is an uptrending market at this point. Okay, so now that you have seen this, okay, now that you have seen this, let me just put in this line again. Now that you have seen that this is an uptrending market, so we can now start looking for M pattern, sorry, W pattern in this particular chart, because we have seen that the trend is up. So we are looking for W pattern, which is a reversal pattern to the upside also, which also correspond, or a confluence with the higher time frame. We want to make sure that the pattern is also in accordance with the higher time frame trend, right? So we go to 15 minutes time frame, for instance. So on 15 minutes time frame, let's just see if we can get W pattern on 15 minutes time frame. So look at this particular pattern right here. You can see the price pushed to the downside, created the first low and created the second low, then reverses to the upside, right? So we expected to buy at any point here, which I'm going to be sharing with you where to buy and how to know the ones that is going to hold. Okay, so this is simple, the kind of the most simplest strategy. You just check the trend. If it's an uptrend, then look for W pattern, that is a reversal pattern to the upside, you buy. Then simply, how do you know, or how do you actually verify which pattern or which of the W pattern or M pattern is going to like is kind of more stronger? Now you want to see a sign of weakness among sellers if you must use or trade a W pattern. Okay, when you have observed the trend on a higher time frame and is trending to the, let's say that the price is trending to the upside, okay, and you are looking for buying opportunity. Now you have seen a W pattern, okay, you have seen a W pattern, which is a reversal pattern. Are you going to just buy because the trend is up and you have seen a reversal pattern to the upside also on a lower time frame? No, we want to see sign of weakness in that W pattern created. Okay, and what is it are we going to be checking out? Okay, we are going to be looking at the candlestick formation at that zone. We want to see weakness amongst sellers within the candlestick formation. Candlestick is just visual representation of price action. It actually shows off whatever the buyers and sellers are doing at that particular point in time. Okay, whether we have strong buyers or we have strong sellers. Okay, now how do we know this? We want to see we want to see this kind of candlestick right here. Let's say the price is pushing down this way, and at our zone, which is going to be the pattern, let's say the place that we had that W pattern. Okay, we want to see a strong maybe after the first leg. Okay, let's say this first leg. After that, we see like a push. I want to share with you this, a push, trying to create like the pattern. Okay, then you see the price also dropping this way to the downside. Now the price is coming back to this zone. Okay, the price is coming back to this zone. So what do you want to see? You want to see candlesticks with wicks and candlestick with low momentum. Okay, what do I mean by low momentum? You have to see candlesticks like this. Okay, the size should be small. You don't want to trade when you have candlesticks like this, maybe M or W pattern. You don't want to trade when you have this momentum candlestick or this kind of candlestick creating or forming M pattern. You want to avoid that kind of M pattern formation. Okay, because it's showing you that the buyers or the sellers, they are actually strong at that zone. So you shouldn't be buying or selling depending on whether the direction of the market. Okay, so if you see, let's say you see your M pattern. Let me just give you an example. The price push up this way, and this is the point you are seeing your M pattern. So at that point, you are seeing a massive bullish candle this way, creating that M pattern. You should avoid taking that trade. Okay, so let me give you an example in the chart. So let's see this one here. Okay, let's see this one here. So at this point, so you can see from here. Okay, at this point you can see right here. I want you to pay close attention to the formation of these candlesticks right here. You can see that the candlestick, while coming down, okay, you see a kind of momentum candlestick right here. This one is a bit bigger as this, but at this point you see the candlestick, the reduction in size. Okay, and you see the candle forming the indecision stuff, the doji, or we also have hammer right there. So you can see a lot of wicks. Okay, another thing is wicks, and the size of the candlesticks at that point, okay, is actually showing the sign of weakness among sellers at that point. So this is exactly what the next thing you need to check out after seeing your double top or double bottom. Okay, you must see weakness among sellers before you start buying. Okay, so let me check if I can get any example of the ones you should avoid. Okay, let's see. All right, so look at this one here. Yeah, look at this one here. So if you look here, we have a double bottom or the W pattern again right here. Okay, so at this point we should be buying too, but you can see what the price did. Push us into profit and boom, to the downside. By now our stop loss should be here and it will be triggered. So what happened? You can see that the price actually, when the price is now pushing down the second leg, you see the price created a kind of little or small size candlestick or reduction in momentum, anything like that. Then at the point we needed the small candle, the price started to create a very high momentum candlestick right here. You can see that bearish candle. You can see it's very big. Okay, so and look at the closing. There is no wick below in that candlestick. So it's actually showing you that more sellers are even into this, more people are even selling at that point. Okay, more people are even selling to push the price to the downside. So what they did, the normal market maker, not just market maker stuff, but is the manipulations that happens most time. You can see they just decided to push out people, because once most people who are selling here, they will definitely say their stop loss above here, right? So anywhere you sell around here, your stop loss should be here. So they simply come up, clear out their stop loss. This is what is called displacement. It's part of my strategy using the other block stuff. So they displaced a lot of people out of this trade. Okay, trigger stop losses at this point, then boom, to the direction, to the downside. But the major thing is you shouldn't be taking this W pattern at this point buying, okay, because the price, the candlestick that actually formed within that zone is a strong bearish momentum candlestick there, so you should avoid making entries. So guys, I hope this is simple. I hope you can try this out. Just check the trend, look for pattern, and look for the candlestick formation, how the candlestick reacts around that second leg of the W or M pattern, then enter your trade based on what I've just shared with you guys, and thank me later. Hope you enjoyed this video. Don't forget to subscribe, like, and share this video. And also you can join my Telegram yeah, where I drop free signals. Is free, completely free. So joining is free. The link will be in the description of this video. Just click and join for free, and I will see you guys in the next one. Bye for now, guys. Enjoy.